Good morning. My name is Dwayne Williams, and I sit in the CEO chair of Mac Enterprise Consulting, which is a full service business consulting firm where we help start businesses, restructure businesses, and more importantly, help educate business owners on how to properly structure a business, run a business, and take their business on the journey to success. Today, we're going to be talking about one of the most popular business structures out there, which is an LLC. And we want to go ahead and uncover why I would never get an LLC. And the context of this presentation is geared towards single member LLCs, people just starting out, people wanting to understand what business structure to get into. And what we're going to do is uncover from a fact-based perspective on what an LLC is, what is the most important thing to know about the LLC, what does the IRS say about the LLC, and what business structure allows you to be separate from you. So today, why I would never get an LLC, we would first have to understand what an LLC is. According to some, an LLC is a formal business arrangement. A LLC is a hybrid legal entity having certain characteristics of a corporation and a partnership or sole proprietorship, depending on how many owners there are. A LLC is a type of unincorporated association distinct from a corporation. An unincorporated association, according to the FDIC, is a association of two or more persons formed for some religious, educational, charitable, or social endeavor. Here, the FDIC is setting the tone of how they view an LLC if it only has one member or two. Here, you can see that an unincorporated association is defined as two or more people. So if you are a single member LLC, the FDIC is not even discussing you. When did the first LLC begin? Most people don't understand that the first LLC started in 1977 in Wyoming. Most states, in fact, 40 of the 51 jurisdictions didn't accept their first LLC until in between 1992 in 1997. One must ask themselves, what was corporate America doing before the introduction of an LLC? Again, what was corporate America doing before the introduction of the LLC? First, we have to understand that an LLC, corporation, a S corp partnership, all of these things are called legal structures, right? A legal structure is an organizational framework of how a business entity operates. That means, how do you intend to operate your business on a day-to-day basis? How do you want to be viewed as operating, et cetera, et cetera? The IRS says that when beginning a business, you must first decide what form of business entity to establish. Interestingly enough, the most common forms of businesses are sole proprietorships, partnerships, corporations, and S corporations. A limited liability company is a business structure allowed by state statute. When we go back and read that sentence, we must understand that grammar means everything. Punctuation means everything. A comma in a sentence means to pause. An exclamation point emphasizes exclamation mark emphasizes a point, and then a period means the end. When we look at the definition of a period and its functions, it says that it is to signal the end of a sentence. Don't pass go. Don't collect $200. The definition of end means the final part of something. That means that after that sentence was written, if the world had stopped, that means anything after that does not even matter. But when the IRS says a limited liability company, not corporation, a limited liability company. Most people still say that an LLC is a limited liability corporation. No, a limited liability company is a business structure allowed. That means the IRS gave it permission at the state level, not the federal level. Owners of an LLC are called members. Again, that's a period at the end of that sentence. That means to signify the end of something. So if we look at the context, it says owners, plural, more than one, of an LLC are called members. Again, plural, more than one. The definition of a member is a person, animal, or plant belonging to a particular group. Under no circumstances can you, as a single member LLC, be part of a group by yourself. The reason in the IRS says, since you cannot be a part of a group by yourself, depending on how you have set this business up, we will treat you as either a corporation partnership, or if you file that business on a Schedule C on your personal tax return, we are going to treat you as a disregarded entity. The IRS further goes on to say that for income tax purposes, an LLC with only one member is treated as an entity disregarded as separate from the owner. So I'm going to slow that down just a little bit. An LLC, for income tax purposes, an LLC, a thing, an agreement with only one member, is treated as an entity. Now, if we go look at the definition of disregard, it says pay no attention to, ignore. So we're going to replace the word disregarded with pay no attention to or ignore. And then the sentence will say, for income tax purposes, an LLC, an unincorporated association with only one member, is treated as an entity paid no attention to or ignored as being separate from its owner, unless it files Form 8832 and chooses to be treated as something else. If you haven't filed any type of form to be treated as something else, you are automatically defined as a disregarded entity. Whenever you place the business's income on a Schedule C, which is attached to your 1040, you are a disregarded entity, paid no attention to as being separate from yourself. Right now, what we have to understand is words have power. Some might disagree, but the reality is words have power. Whenever you classify yourself as a limited liability company, what you're saying is you are restricted in size. What you're saying is that you are a person or a thing whose presence or behavior is likely to cause embarrassment or put one at a disadvantage. I would like to believe that when you were thinking about opening your business, none of these words came to your mind, because again, you did not think that your business would be an embarrassment. You would not think that you would be put at a disadvantage. But I'm going to show you how much words have power. So again, when we think about owners of a single member LLC, the IRS clearly says that if the single member LLC does not elect to be treated as a corporation, the LLC is a disregarded entity, and all of the activities should be reflected on the owner's federal tax return. It further goes on to say that a single member that is a disregarded entity that does not have employees and does not have excise tax liabilities does not even need one. It should use your you should use your social security number. Most people fail to understand that if you don't have employees, you shouldn't even be or have excise taxes, you shouldn't even have an EIN number. You should be using your social security number. Then some would also say that, well, the bank told me I needed one. No, the bank told you that according to their checklist of things needed to open a certain type of bank account, you need certain things. And that is the bank's job is not to check to see whether or not you are in compliance with the federal government. The federal government says you should ask yourself, do you need an EIN? You will need an EIN if you answer yes to any of the following questions. According to the IRS, the questions are, do you have employees? An employee is somebody that you pay. They have taxes taken out of their check. If you're paying them on a 1099, cash, Zelle, Cash App underneath the table, they are not an employee. They are a contractor. Do you operate your business as a corporation or a partnership? By virtue of you being a single member LLC operating underneath an LLC, you're not operating as a corporation or a partnership. Do you file any of these taxes? Employment, excise, alcohol, tobacco, or firearms? Do you withhold income other than wages paid to a non-resident alien? Does your LLC offer a retirement plan, a pension plan, or even, as it states here, a KEO plan? And is your LLC involved in a trust, and estate, real estate and mortgage, investment conduit, nonprofit organization, farmers co-op, or a plan administrator? If you did not answer yes to any of these questions, then you don't need an EIN. This is what the federal government is saying. Do you consider yourself a small business? Now, I want to pause right here just for a second, because most people don't understand how much words have power. So I ask yourself, have you ever considered yourself a small business? According to the definition of small, it is of size less than normal or unusual, insignificant, unimportant. I would like to believe that when you were laying down thinking about opening your business, you never thought that you wanted to open a business that would be less than normal, insignificant, or unimportant, but yet you continue to classify yourself as a small business. Now some would argue that the SBA, Small Business Administration, the IRS, and all of these particular entities were talking about the number of employees, etc., but I'm here to tell you that you cannot under any circumstances discount the fact that words have power. Whenever you opened your business, if an asset makes you money and a liability costs you, how in the world can you say that I wanted to open a business that's going to cost me something? Whenever we think about limits, right, we always say, man, be all you can be, reach for the stars, but then we would follow that with saying the sky is the limit. Again, how can I reach the star if the sky is the limit? Why would I want to associate myself that has limits, liabilities, or more importantly, insignificant or small? So which business structure should you choose? Well, according to the IRS, the term United States person, that means a totally separate being, means a domestic corporation, citizen or resident of domestic partnership. Now, I started at the bottom because I want you to make sure that you catch what I'm saying. A domestic corporation is seen as a United States person. Well, what does that mean exactly? Well, for federal income tax purposes, a C corporation is recognized as a separate tax-paying entity. Now, I want to pause right here. Most people say, well, go ahead and get an S Corp. No, it says C. In fact, the S in S Corp stands for small. I'll let that marinate for a second. For federal income tax purposes, a C corporation is recognized as a separate tax-paying entity. Whenever you go to get an EIN, the IRS sets you up for you to make a choice. We live in a world where we have free will. Everybody has the power of choice. The IRS is setting you up to make a choice. How do you want me to treat you? Do you want me to treat your business as something that's tied to you or separate from you? It says before you even apply for this EIN number, you should have already determined what type of legal structure, the framework, business, or type of organization is being established. So when you go to corporation, it clearly says a corporation is a person. The only structure that allows you to be separate from the business is another person, not something that's tied to you. You are not separate if you accept responsibility for something. And this is why business owners always have to provide their social security number for business loans. And let me share with you in a bit more context what I mean. We all file taxes on a Form 1040. That is your U.S. individual income tax return. That talks about you, your social security number, your spouse, your dependents, and all of that good stuff. And on line number 8, it says additional income from Schedule 1. Well, what is Schedule 1? Most of us don't go past the first couple pages, but let me tell you what Schedule 1 is. Schedule 1 is the additional income and adjustments to your income. On line number 3 of the Schedule 1, it says, please place your business income or loss from Form Schedule C that's attached. So whenever we go to Form Schedule C, at the very top, the IRS is clear on how they're going to be viewing you and treating you. On Form 1040, which is your U.S. individual income tax return, there's an attachment called Schedule C. At the very top of that attachment, Schedule C, it says profit or loss from business, and underneath in parentheses, right there, it tells you how the IRS intends to view you, handle you, and treat you. It says that you are a sole proprietor. Well, the definition of a sole proprietor is nothing more than a person who is the exclusive, I'm going to pause right here, exclusive, pause again, exclusive owner of a business, entitled to keep all profits and tax after tax has been paid, but liable for all losses. Now, pause for a second. The reason why I highlighted liable, because I wanted people to understand what liable is. Liable is being responsible by law, legally answerable. So when we think about that definition in its purest form, when the IRS is beginning to ask you everything about that business, it first starts out with saying, tell me the name of the exclusive owner who's going to be responsible. Then it asks for the social security number of the person who's responsible. Then it says, before you can even tell me the name of the thing that you're about to talk about, I want you to tell me what type of business or profession it is. Then tell me the name of it. So then after you have already indicated that you are the exclusive owner of this thing that you're about to put on here, the IRS says, tell me everything about your income and expenses. And then on line number 31, where it all matters, is where you see your net profit or loss. So here is where the definition of pass through entity comes into place. A pass through entity is a business who elects to pass all of the corporate income tax and deductions through to the shareholders and are assessed tax at the individual income tax rate. In other words, whenever you take all of the income and the expenses of that business and average it out, equal it out, whatever words you want to use, on line 31, you're going to take this number on line 31 and pass it back to you. Watch that. Because on line number 10 of that schedule 1, it says add lines 1, 7, and 9. Place that on your form 1040, line number 8. And then line number 9 of your individual tax return says add lines 1, 2, 3, 4, 5, 6, 7, and 8. This is your total income. The definition of your is of or relating to you. Yourself, yourselves, especially as possessor or possessors. How can you be separate from something when you just took responsibility for it by placing it on your individual tax return? So why I would never get an LLC? Because I don't want to be personally liable for the business. My name is Dwayne Williams. I sit in the CEO chair of Mac Enterprise Consulting. We will be more than happy to help you if you want to change your business structure today. Thank you.